Hello everybody, this is Lara with your weekly video for gold for the week ending Friday 3rd of March 2023. Both Elliott wave counts now expect the last little wave down is over and a bounce is underway. Both Elliott wave counts expect the bounce to find resistance about 1900.88 and to last a few weeks, either a Fibonacci 13 or possibly 21 days in total, and so more upward movement toward that target. After that, both Elliott wave counts will expect the next wave down, and how low that goes is going to start to tell us which of the wave counts is correct at a higher time frame. This is the preferred Elliott wave count. It is bearish. It sees a huge grand supercycle degree fourth wave correction unfolding as an expanded flat. Within the expanded flat, this is the end of wave B. It's moved beyond the start of wave A, as B waves do in expanded flats. Where B ends, C begins. Supercycle C must subdivide as a 5-wave motive structure, and that will be labelled at cycle degree 1, 2, 3, 4, 5. There are only 2 motive wave structures for a C wave, an ending diagonal or an impulse. Within an ending diagonal, all of the subwaves must be zigzags. Within an impulse, waves 1, 3 and 5 must subdivide as motive structures. And so if cycle wave 1 is a 5-wave motive structure, that means supercycle C should be an impulse. With cycle wave 1, a leading expanding diagonal complete down here. Cycle 2, a very deep zigzag complete up here. Second waves following first waves in leading diagonals are commonly very deep, so this part of the wave count follows common behaviour. And cycle wave 3, beginning here, may only subdivide as an impulse. It must move beyond the end of 1, and it must move far enough below 1 to then allow cycle 4 to unfold and remain below first wave price territory, and then finally cycle 5 to complete the whole structure for supercycle C. The target for supercycle C is for it to reach 1.618 the length of supercycle A. That's a common ratio between A and C waves in expanded flats, and that would see supercycle C move beyond the end of A, the December 2015 low at 1046.27, avoiding a truncation and a very rare running flat. The target for cycle 3 is for it to reach 2.618 the length of cycle 1 at 1037. That's the Fibonacci ratio I'm using because of the depth of cycle 2. And the target for primary 3 is for it to reach 1.618 the length of primary 1 at 1337. Primary 3 may only subdivide as an impulse. Cycle 3 may only subdivide as an impulse. Within the impulse of cycle 3, primary 1, a beautiful looking 5-wave impulse over here. Primary 2, a fairly reasonable looking expanded flat over here, overshooting the 0.618 Fibonacci ratio of primary 1. And primary wave 3 looks likely now to have begun. If primary 2 were to continue further, it may not move beyond the start of 1 above 2065.89. Let's go to the daily chart now. The high of primary 2 up here is this point up here. This is the end of primary 2 and the start of primary 3. Within primary 3, I will label intermediate wave 1 incomplete. Within intermediate wave 1, minor 1 looks likely to have ended a few sessions ago at this low, and now upward movement on Friday has properly breached an Elliott channel drawn around minor 1. We draw an Elliott channel from 1 to 3 and place a copy on 2. Now that this channel is confidently breached by a full daily candlestick of upward movement above and not touching the trend line, we can have confidence that minor wave 1 is over, and a bounce to last possibly either a total Fibonacci 13 or 21 sessions may have begun for minor 2, and the most likely area for it to find resistance would be the 0.618 Fibonacci ratio at 1900.88. Minor 2 may not move beyond the start of 1 above 1958.83. On the weekly chart, this is the bullish wave count. It considers the bear market over in December 2015 as grand supercycle wave 4 lasting just 4.25 years. Remarkably brief for a grand supercycle degree wave, but that's the alternate. That reduces the probability. There's a bunch of problems in terms of Elliott wave, in terms of proportion and structure for this wave count, which is why I'm judging it to be less likely than the main or preferred bearish wave count. But we need to consider the bullish alternate. And so if there is a new bull market underway, then I will label it supercycle wave 1, and it will be unfolding as an impulse. Within it, cycle 1 and 2 are complete well off to the left of the chart. Here's the end of 3 and 4 and 5 underway. 4 subdividing as a double zigzag, W, X, Y. Y barely moves beyond the end of W. This doesn't look like a typical double zigzag. It just doesn't have the right look. Cycle wave 5, subdividing as an impulse most likely, will be labelled primary 1, 2, 3, 4, 5, primary 1 incomplete, intermediate 1 over here, intermediate 2 now continuing overall lower. If it gets deeper than I expect, it may find support at the lower edge of this channel, and it may not move beyond the start of 1 below 1616.14. On the daily chart, this high here is this high here. Intermediate 1, a 5-wave impulse. Intermediate 2, unfolding as a zigzag. Subdividing 5, 3, 5. The degree of labelling is the same. The expected resistance for the bounce is the same. The expected direction is the same. Everything's the same for both wave counts at this point. They'll differ in coming weeks, but not now. And so expect more upward movement over the next 1, 2, 3 weeks, up toward 1900.28. Minor B within the zigzag may not move beyond the start of A, above 1958.83. On the weekly chart, this week's candlestick is not properly correctly a bullish engulfing candlestick because the open of this candlestick is a little bit above the close of the previous candlestick. So the body of this doesn't actually fully engulf the body of this, but it has closed above the prior candlestick's open, and that is a strong bullish close, and it has done it with some push from volume. So let's overall expect more upward movement as likely. Next resistance, 1915. On balance volume gave us a weak bearish signal. This weak resistance line may assist a halt to rise in price, but it really is very weak now, and it's been weakened further by that breach. ADX is declining. There's no clear trend at the weekly chart level. RSI, money flow stochastics all neutral. Price reached resistance 1980. Stochastics reached overbought. Now price is overall moving lower. Stochastics moving into neutral. Expect overall the bigger picture for price to continue on down to support and maybe end there if stochastics reaches oversold, if there's still no trend indicated by ADX when it gets there. When ADX says that there's no clear trend, I use a combination of resistance and support in conjunction with the stochastics, oversold, overbought, to indicate swings from resistance to support and back again. That's the general approach for a non-trending market. On the daily chart, there's some downward movement here. Some prices bouncing up off support about 1810 at this time frame as well. No clear trend. And stochastics returning from oversold. Price bouncing up from support. Expect overall upward movement to resistance about 1980. Don't expect it to move in a straight line. It may be choppy and overlapping along the way up. And if this resistance is too high, it could be too high. It could be a bit optimistic. That's it from me this week with your gold analysis. I hope everyone's looking forward to a fantastic weekend.